Hello everyone, how's it going? In this video, we will talk about GTII, its trading potentials, if the stock deserves to have a place in your portfolio, and why there could be a massive gain that's possible from not just the ongoing short squeeze, but the company itself. Before I begin today's topic, if you appreciate my content and would like to support my channel, please give my videos a like, comment, and subscribe to my channel. Also, please consider to take a look at the affiliate links down in the description. For the Amazon link, you can simply save it as your bookmark so that every time you purchase anything from it, a commission can be paid to me without additional costs for you. Thanks for your support, it means a lot to me. And with all that being said, let's start today's video. We have always been hopeful about the price action and tendencies of GTII, and today, I'm happy to say, is no exception. The stock showed us over the past couple of days and also the couple of weeks that this is not the end, not even the beginning of the end, but the end of the anticipation for quite a journey ahead. Over a month, the stock has been up by at least 40%, with the share price going from $1.20 to $2.03. Things are looking on the up and up here, with a self-fulfilling prophecy as always in the market that's getting more real and more substantiated every tick that passes. With every dollar that keeps buying GTI shares, and every unit of stress in whatever measurement that is measured in, felt by the short sellers towards their massive and increasingly expensive position put in GTII. So overall, people are hoping that things will go well, and by thinking it collectively, especially in a small market cap, things can keep going for the better to a large extent. I have this kind of conviction. I don't often have it. I usually don't, in fact, but I kind of do for GTII at the moment. So, given how bearish the overall market has been, it's really refreshing to see a company that actually, despite the fact that it's losing money, it still gives people the possibility to make some gain in the market with the potentials of generating much more than what we currently see. Now, obviously, we got to remember that this is even more so than any other stock. With GTII, the company has been put under pressure because the overall market isn't really keen at keeping the capital in the equities, and that at any time people's faith can crumble into nothing, not even dust, nothing, because of one bearish candlestick. Another percentage of interest rate increased by our famous J. Powell, and this assumption is also getting stronger every single day, by the way. The rates are going to keep raising at least this summer, So simply put, don't ignore the risks involved. But at the moment, it seems like we are in the right phase for even higher levels. Okay? And remember, GTII is a stock that we speculate with. I personally don't want to stick with it. I will go in, reach the expected levels, go out. That's my current goal. Global Tech Industries Group, trading under the ticker symbol GTII on the OTC market, is a company based in Nevada focused on acquiring growth and startup companies to build its portfolio of promising companies for tomorrow. So simply put, it is an acquirer whose value depends largely on the expertise, assets, research, and people that they buy within the sectors of technology and growth companies. The reason why this kind of structure can be attractive is because the narrative is not only interesting, fresh, but also flexible and can adapt to whatever that is currently trending in the market. Of course, this may not be what you want to hear if consistency and continuity are non-negotiable value in your portfolio. But for market participants who simply want to make a quick buck, by buying low and sell high, this is actually a very interesting position to have. In a way, GTII reminds me of companies that we have covered before on this channel, such as Ideanomics, trading under the ticker symbol IDEX. It may not have the same kind of purchasing profile, shall we say, but ultimately the value and the proposal of value relies on the company's capacity to retain valuable assets with high potentials to be popular and trending topics in the months and years to come. It's like putting your money in a publicly traded VC fund, so to speak, or early-stage business incubators. Because the investment can be done at a very early stage, the equity may be very inexpensive to acquire to be later sold during a different economic phase. That is essentially the reason why companies like GTII have always interested the market. It's not always because we believe wholeheartedly in the projects or the companies they have acquired over time. With that being said, those kinds of companies obviously come with their own risks, like the lack of trust in the market, or even more simply, the lack of demand for risks at the moment. If the market remains bearish overall for many reasons, of course, with many titles losing value, it's going to be a matter of time before capital becomes more risk-averse than ever and would collectively prefer to head back to the bonds, to the guaranteed deposit certificates and blue chips, to tough through the financial winter, which might be particularly cruel and long this time. This kind of situation is not only bad from a fundamental point of view, but also from a financial perspective. It may force the company to get funds either at higher interest rates or from companies that will actively try to make money at their expense. This is precisely what happened with GTII. Some time ago, it entered into an agreement to obtain funds from an entity with a tracked history of shorting companies they know are having a rough patch. This is the kind of short-selling behavior that can be seen in times of crisis as well as in periods of bubbles. What happened between 2020 and 2022 ticked both boxes, and GTII is therefore very vulnerable for this kind of behavior. A stock can be borrowed from brokers, sold in the market, and be bought back later, preferably at a lower price than when it was first sold. Unlike the typical long positions, a short position will generate financial fees that need to be paid periodically to keep the position open, which would further motivate the short sellers to buy back their positions if they can spot a movement against the shorts, regardless of whether it can be justified or not. Sometimes it's just because a bunch of people decided to buy in. This is another major attraction of GTII. It has an important short position stacked against it, which is another way to say that there is a high potential for short squeeze to occur, which may force many short positions to be redeemed so that the short sellers don't suffer massive losses. Now, we have to remember that if we have long positions, the potential loss is between the entry price and zero. The potential loss for short positions, on the other hand, is much higher because it would be between the entry price and infinite high, in addition to the financial costs payable on a periodic basis. With that being said, GTII obviously offers a lot of potentials and opportunities in the upward volatilities. But remember, we must remain vigilant about the market mood, both in its own right and towards GTII in particular. We should also consider whether the company is really a decent company to invest in for the long term. Let's not forget that Ideanomics is now a penny stock, having long passed its prime. This is the scenario that we definitely want to avoid. We don't want to stay too long. So, my opinion towards GTII remains that it is a company best suited for short-term trading and not long-term holding. So at the moment, I would recommend to keep buying GTII shares and to expect some sort of spike towards higher prices, regardless of if it can result into something more sustainable. So look for the spikes and prepare for rapid exits. The profit target should be at least 50% of your cost basis to compensate against the risk involved